Welcome back to the Golden Gate. This video we are going through some real examples on a chart so you can understand how this all works. Just want to show you the difference between these two patterns. One is called head and shoulders, one is called Quasimodo. The head and shoulders has a left hip, has a head, and has a right hip. This is also called shoulders. And as you can see, the neckline is almost equal down here. This is a very common pattern and is not a very reliable pattern. It works about 50-50, and when it doesn't stay on the 50 right side, it's a terrible pattern to trade, but many people trade it, and that's how it is. So we can basically say that this pattern is not what we want to trade. And instead we want to go with this pattern. Quasimodo has the same look and structure as the head and shoulder in the beginning. Shoulder or left hip going up, make a head, coming down and breaks the neckline of the left hip like this. Then it goes back up and we find our right hip or right shoulder with our entry. Now, Quasimodo as it stands is not enough to have high probability trade, even though it may look good in hindsight and out on YouTube and so on when people show them. Therefore, we have our rules that we need to apply with volume candles. That makes it a much better strike rate. So that's the difference. Head and shoulder, Quasimodo, and this is the one that you are going to focus in on. Great British Pound against Japanese Yen. As you see, we have one situation here. We have this consolidation coming down, starting with a bullish move, taking out the left hip or the neckline like this. This is super clear. This is exactly how we want them to look like. When we come up here, measure A to B or 0 to 100 like this. And this almost hit one entry, 50%. Not perfectly, but almost one, right? And that's just how it is. Sometimes it won't go to our retracement levels. We would expect this one to come down to the first opposite candle of the head down here. It never did that, right? But it was, except that, it was a good setup. See on this one here, you have the neckline. You see how this is just one bearish candle. This is a Quasimodo, but not our QB. We need a clear block or a long candle that goes from above the neckline through it. Otherwise, it's not a trade. Right? You see it here again. Consolidation, head. See how this block is super clear. This is the best one when it's 100% bearish candles striking below the neckline here. And again, we could do this one up to here. There we will get 1, 2, and 3 orders in. Remember, when you come down here, or when you've done this one, you set up your pending orders, 3 of them. Your target is here, just below this one. If all rules are there, chances for it to score is super high. Okay? What you see right now is that this one is actually only repeating. We already won this one. And you can see on this one up here, same step 1, consolidation, same head, same break. Then it just went sideways inside of this one. You could do like this, because this is the lowest level, right? Now this is going down, going up. Here will be our take profit on this one. And here we'll get, you see how we went to 50, 60 or 58, 68, and hit the take profit. In this case, you will leave this one and it will be stopped out, which is totally fine. Because what happens now is it goes back up again. Here will be our original stop with the free QB trading, right? That's how it is. Sometimes it goes there. And in a more advanced model, which will come in the future, you wouldn't put your stop here. You would use another method for that. But then we take when and if you join that section. But we already won one trade here with all orders, so we would still be in profit even though this one would stop us out. And that's because these retracements has such good risk-reward ratio. Even if you don't win everything, you still can do very well. That was pound yen. New Zealand dollar, Japanese yen. Consolidation. Take out something and also the daily high. What it do? Clean candles breaking the neckline. Volume down. Someone with a lot of money did this. Now they are retracing it back up. We haven't taken out the stop here yet. We can easily see that we have several orders, or all orders are already in. So this one, we expect it to go down here for full take profit. And there's a stop. So basically when you set this up, set up pending orders and you leave it. It either hits here or it hits here. And our goal is to have more here than here, of course. This is an ongoing. I can show you the results simply because this is where the market is right now. Canadian dollar, Swiss franc. See how it comes down here. How messy this one is, which is fine. We go up from here, see the first consolidation area is here. Right. So if this is the high candle, how far can we go when it goes higher or lower? We can't. That means that this first candle is our neckline candle there. See how we try to do a strong one here? This could be a small Quasimodo, but you see how it can never break clearly away from this area. It will more be on head and shoulders, which we don't trade. But here we have it. Below the neckline, be there. Or actually, there's the neckline. Below the neckline, clearly 3 candles striking right up. Big volume coming in. Okay, so all you do, take the low, high, like a robot. 1, 2, 3. As you can see, several of the first one I show here goes lower than these 3. These are the most common. But you can, of course, expand these to like 78, 88, or even 98, even though that's very close to the stop then, right? The stop is down here. See how close it was to the stop. It never stopped. Instead, remember, this is where we go for. This is our target. So hopefully Monday, it will strike this one. We're not looking for it to go up here, even if it's been there before. This is not a new area. We just want to go here, close it out. As you will have many trades running. You just want them to do what we expect when we have all rules in place, and that's it. Let's jump from Forex to an index. This is US30 Dow Jones Industrial Index. Let's take a look at this one down here. We strike something, a new daily low like this. Looks very nice. Here's the contraction zone. Here's the expansion leg down, right? And what we want to have the neckline to be broken. Never did that. Instead, what this isn't head and shoulder. It did it perfectly, but it doesn't matter. We don't trade them. This is not our setup. Then it comes here, the leg that we are looking for, but it never come back. It just kept going. How it is next, right? We come up here, we have a consolidation zone. We also have one here, up to here, but never come back. The next one is here. Goes up to a peak top, to a daily high. Go down a little bit. Our neckline is here. What happens? Strike right through it. Boom. All our rules fulfilled, meaning from this point, highest here, down to the lowest before it went up. There. All three orders in, went up to 80%. Target here, target done. Okay. This is Wednesday. So this was a daily low again. Here. Right. In an uptrend like this, I will prefer the peak high, but you can of course watch this too as well. Clear, strike out of to the daily low like this. You may be looking at this one. This is not clear, should be clear. See, it cannot even close one candle below the consolidation here. These you should absolutely never take. See how these heads are clear. Here you have a free candle outside of this one. Put the line, say, okay, do I have a free candle as head? Yes, I have, then it's valid. Same thing here. Several candles above this consolidation zone. Right. This one, it was actually a Thursday high. While it's in between a high and low, I mean, if you really want to only trade US30, you could look at this one, but you see what it do. This be really questionable because it sure is above the neckline, this mode down here. So you could have taken this one, but these would not be 5-star setups. Even though they did all these three, target was down here, so you would score another trade there. This is what you need to log, track data of. Right. Now when we're down here, here's the consolidation. We go up, we go down. When you are down here, you want market to take out this one, this high here. It did that, not to the lot, but it did. It was a clear mode, clear volume. I mean, if you ignore this one, it was just one candle. It's a long string of buyers here, telling us that chances for this trade to work out is pretty high. The lowest level. And as you can see, it hit the 50%. But also if you do it like this, you do that this or this, there are no perfect science behind that. If you're doing this one, you will hit 2 orders so far. And your goal is that it only move to the highest where it come from. Here. Then you would take out 2 orders, leave one in, see if it can strike even higher. This is an uptrend, so chances for it is higher. The more trades you take, the more risk you expose yourself for, And as you do these, you will get experience to know which one is probably better to take than others. And you may have much clearer rules on this. You may say, well, it must be one string of the breaking leg. You do that. I just give you the information what is the highest probability that I do. That doesn't mean you need to follow it perfectly, as long as you do it better. That was Dow Jones. Australian dollar, Swiss franc. What do? We find a new daily low like this. We check the consolidation zone, or there are a lot of consolidation zones. But check this one. Put the line here. Do we have a free candle below this one? That confirms that this is a real head. If I were putting a line here and the last candle, this one, couldn't have its open close below this line, it would be a trade I would be very careful about, because I've broken my rules. I didn't follow the rules here. What happens here is this consolidation zone. Right? You could be using this one, but most likely you will be using this one, right? So we need to check, okay, if this is the consolidation zone, I would look for the lowest candle, which would be this one. And I see that it can go higher, but not lower. So this is my neckline all of a sudden. What does this one do? Break the neckline easily. Okay. We have a trade. Hit all of them. Full profit. This is exactly what you should be doing. Only the clearest trades. Collect your profits. It may go up to here, but we don't care. In this situation, you see how we have taken out full profit here. We would have one order left here. Two has been closed. So as long as market can't grab us here, we may be part of a big uptrend here. We don't know. And since we can't lose anything, our emotions will not be there, because all you can do is wait, let time. Remember, this is 4-hour candles. See, I'm using FXCM as feed as well if you want to have the exact same look. That was also Swiss franc. Remember, I don't expect you to look at the video and then just become a profitable trader. No one will. But I provide you with the information to have the opportunity to do that. That's why you can be in the QB trading for as long as you need and want. You don't even have to go into to the professional section. If you feel this is perfect for me, this works excellent with my daily schedule and so on, then you stay there. We're not here to sell things. We're just here to provide better services, better knowledge for the person interested in it. If you're happy with this one, you say, well, it was free. I learned how to make my account grow, and that's it. And I'm super happy for you, because this is my passion, to teach and train people into be profitable traders. If you do make money from the market and want to join our professional section, and that's perfect, because then you will know even more. And this Quasimodo break will be part of that, but it will be a small portion of professional trading. But it's a very powerful setup when you understand that Quasimodos with volume candles is what matters, not just Quasimodos. See it here? Contraction zone, we go up. This one, we have one candle above, qualified head, perfect. Moving down, right? Moving down. In this case, you may say this is a consolidation, which is totally fine. Nothing will be perfect. And you say, okay, it broke this one, yes, but it didn't take out the wicks of previous candles. It must do that. else you just hit space in trading view or arrow up, down, find a new trade. Because you only, I mean, the better you become, you will have a massive strike rate on this one. That's the goal for you. My goal is just to provide you with a working system that you can apply on any market over and over again. You see what happens here. This is also consolidation, right? It's here. Clearly, someone moved it further down. Many people will join in here, sell it, and exactly when they sell it, pretty much market will take them out and they will stop out and they say trading is not working, right? You must understand this with contraction, expansion, retracement, and back to where it originated from. See how we use already recently mowed levels in the market. We don't need more than that. We have so many assets. It's not being on specific assets. So on this one, you have the high here, you have the qualifier head, you come down to here, which is the lowest before it retraces back. You do it like this. 50, 58, 68. Remember, these numbers are based on my data. If you find other levels for your assets, use them. This is where I want to enter. When I do that, my stop is up here. And here's my target. You see how it strike right up to our two positions that we closed, but not the third. That's very common, that we have our long-term position untouched. And if this one goes down to here, that position may be worth much more than these two. And that's exactly how we work with money management or self-management. Super important that you stay in the market when you have went through all this pain, because this is pain. This takes a long time, all right? But unless you don't do this or do this, you do nothing more. Lived in. Either you take profit or you take a loss. And we will try to make as few losses as possible, but nothing is guaranteed in trading. And when you win 3, great. If you would lose 3, not so great. But that's part of the business. We just have to repeat the same pattern over and over. This was EuroCAD, another FX pair. We've been through Forex, index, crypto is coming. Bitcoin, US dollar, right? Without me doing anything here, can you see these patterns on the chart? Right? Hopefully you can. See here is Tuesday, and there's Monday, so it means that this is a daily low, which is great. We have a consolidation zone up here. We have a candle clearly below, so this is a qualified head. We have step 1, we have step 2, step 3. This is so nice when it looks like this. Not all will, but when they do, you know, okay, this is super nice, because if it's easy to go up, it's normally easy to go down and to go up even higher. That's why simple trades we do and expect just to go up, 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 many times retraces this to the same level again, and we get stopped out before we can achieve the profits. Let's take this one. We start with this one. See the bottom here, you see the top here. Didn't hit the third entry, which is fine. We get 2 orders. There's our target. When you only get 2 orders in, if you want, you can of course keep the lowest one if this one is not triggered. But I like to close both. Make as much profit as possible on this one. Sure, we will miss this one with this lowest here. But that's of course up to you how you do this. I always recommend that you should stay in with 10% in the market of your full order. But in this case, you can take one of these. That's why you put in 3 separate pending orders, so you can set different take profit. You can also close them partial, of course, but it's easy to just have 3 orders like this. Okay. See, we follow the rules. This one is so important, this volume candle break of the Quasi. When it's there, it increases the probability to strike with these trades massively. If you're taking every Quasimodo, when there are mixed candles going up here, that will lower the strike rate tremendously. We don't want that, right? We got the new consolidation, goes up, never come back down. New consolidation, goes back up. What does it do? Come down, right? We are still in the business here. We are following our rules. Right? On this one, we have the lowest candle here. This go higher and lower, but this is still the highest open. See how this goes higher, and no, it didn't go lower, sorry. So this green candle is our neckline candle. There, we need a strike with the volume candles from the above here. See how we do that? This one, bang, bang, right down, we close below this one. Meaning it just went from a head and shoulder to a Quasimodo. When it is done that, all we do is set up our orders. There. See how it nicely took all three of these. Why did it do that? Because this long range of selling candles, the first opposite bullish candle was here. See how it went exactly to the start of that one. That's very common, but it's easier to do it like this with the percentage tool, so you can get several orders in, because 50 many times it goes higher, of course, but you also get into a lot of orders that way. That's a far way from this one, right? But if you just wait it out, your target is down here. Let's see if Bitcoin can do that today, tomorrow. As long as we do not hit the high here, it's most likely going to test this one, because here is the liquidity zone. A lot of liquidity below here. So chances it will strike this one is high. We just repeat the same system over and over again. The volume candles is so important. Without that, it's not a high probability trade. My favorite pair, gold, US dollar. It has been very nice to us. Why has it been very nice? Because it's done a lot of Quasimodo breaks recently. You see, consolidation, line, candles below, head confirmed. Okay, we go up here and say, what is the highest? Is this one. We go to the left. Did it break the high? No, so we don't have to check more. This is the neckline candle. What does the volume candle do? Breaks. Great. Set this one up. This will be your first orders. As you see, market didn't reverse take us in. It went higher. We just expanded the range until it take us in. See what it went. Normally gold likes 61.8, but 68 in this case because it's based on stats, right? See how this volume, this is a school book example, exactly what you want to say. See how it strikes the wick here, which I really want to say. Otherwise, it's very dangerous to take. Did that. We wait, we set our orders. 1 in, 2 in, 3 in. What happens? And this is a super high paying asset. Sure, when you hit stop, it's not fun at all. But when you do take all three, and especially if you keep this one in the market, let's say it break up to here on Monday, you will be happy you kept this one. This will be paid for many of your Forex pairs payouts. Index, crypto, metals pay better. But there's also more risk, of course. But this is my favorite. And 99% of all trades I do is here. And while this was a Quasimodo, look here. Thursday, Wednesday, okay? You see, we don't have a head that is qualified with a candle. You see what it did? Strike below neckline, went up. I don't know if this was qualified. I didn't take this one. Coming down easily. And there we had our Quasimodo buy. So we had a Quasimodo sell and Quasimodo buy. Both was almost qualified. This one didn't have the head rule. A free candle above this one. This one was easily qualified, right? With this one down here. Free candle. What happens here? New daily low. And we actually have one candle below there. It was close, but it was. All we need, check off your rules. Have them on a paper note beside your keyboard. Is this valid? If it is, go. It did the first strike, pull back, second strike. See how nicely it just went right through. Okay? So what you do, take the next trade, set up. You will be starting there, then you will go there, and that was the highest, I think. Yeah. Or actually, this is interesting because what you see here, went down, both your 50 and 58, or potentially 50, I don't know how this candle worked out, but 50 at least would have scored already. 58 potentially scored already. And if you have a sharp eye for this, you will see that this hit here was also this Quasimodo here. Sell. This is far back in history. So just because they do that doesn't mean this is a sell market. Absolutely not. But it would do exactly what it, because this is clear volume candles. This is consolidation, right? This is a body above. But this one took way more time. But don't forget them if you have seen them, right? And then we went down to 68 on this one. And we expect it now to go here. If you do that, will you stop to zero loss and leave it? Because gold can run as long as it wants. And when it do, your profit loss green numbers will flash. Don't predict. Don't think you know what's going to happen. Do what you see on the chart and you will do good. NCD US dollar back in Forex. This one is so good for many reasons. If you have been trading with them with the SSI trading system, you would know what this was. Brokers has reported they should start selling. We just hit the previous monthly high, and now we look for our Quasimodo system. Consolidation, going up, volume candles right through it, below the neckline, Quasimodo block created. We hit 2 orders, not the third. And that was easily taken out here. If you took both, you would be out. If you took only the lowest, kept the highest, because this one never triggered. Pretty good trade, right? Euro Aussie dollar, back to Forex, and we consolidation, move up. We know the neckline, the lowest candle is here. This one could only go higher, not lower, so this is our neckline. Problem with this one is, you see, it's very mixed. You think, this is probably not the volume that I'm looking for. It has buyers that are fighting here, right? What happens here? Above neckline, very clear move down. Many traders joined here, of course. Consolidate and stopped out. What you do, this one, this one. 2 orders in. Now we expect this one. Been here before, recently. Most likely going to go here again. Right? Here you also see another body below. Consolidation. Clean move up. See how when we were here, it didn't pull back. So chances for it to come back to here or here for the next long-term buy Quasimodo, it's there. But the closer you have your rules fulfilled, the better they normally are. The further away they sit, because many times you will see these, and then it may take 1-2 weeks before it actually come there, and there may be super trades. But in the beginning, start with the simple ones like this. Time will need to pass to profit from this one. That's fine. We don't have to monitor it even. We have our order set, we have our stop set, and we just wait for the target, right? So what can we add to this? Make it a little bit more complex when you have gap in candles and stuff like that. When it's a yen pair as well, be prepared that it may many times strike the high with just a few percent and then down, right? That's something you need to log and look at the data, of course. See this one, we have a consolidation here. This zone here. So you could here, of course, say this is your highest candle in this consolidation. This is a new consolidation. But you can also see that this is one consolidation, and this will be the highest. And since it didn't, this candle went lower, this one didn't went higher. This is your neckline here. See how it's struck right down? Okay, so we can drag our. I just want to show you this little more advanced because it's not always super simple to see. There. And this one you may be taking in depending on your broker, of course, but it was very close to this one. But 2 orders in. And a gold fair as well, which can help us to feel better at least. And we're looking for this one. Take 1 order here or leave one. And leave one in. It's up to you. Right? You can close both because that's another trade. Pocket, pocket, pocket. And that's how you win. That's how you get funded and become a profitable trader. Not be greedy, not predict, not think you know what's going to happen. Do what you've seen being happening. See, this is not so hard to do, but still there are so many people not doing it, not listening, and because it's so easy to do all the other things that you shouldn't be doing. Market more in what I call the CET system, contraction, expansion, trend. I apply that on all markets, been doing it for years in different systems, but it's the same thing. You contract, you expand, you retrace, you pull down to the last low, and you're done, right? Market has always been working like this. I didn't come up with this. I just put together a method for you to make your life easier so you can apply this in your trading, not just watching hindsight charts in how this should be done. Test it live and see how it works for you. You will be amazed when you listen to the volume candles of the Quasimodo. It works. Pound Aussie dollar, Great British Pound Aussie dollar. This is a trade I wouldn't take. And the reason for that is we have a volume candle, but it never strike this wick. It should do that. And if you look at the wicks here, yeah, we have a candle below, so it was qualified. Well, if I take this one, I would do that. This is for the professional section. I would do that because this one says retail traders sit short 49.80% more than longs. The chances for the market maker to strike a bull move is high. So when it looks like this, and if I have anything else that I can use, I may take it. But there are so many other trades. So see all this list here. So many assets to choose from. So if you're on a long winning streak and a massive profit, fine, take them. But if this was your first trade, this was not be a recommended one because it didn't broke. This was just on head and shoulders, not a Quasimodo block break. This one, you could argue that it is below the neckline. Actually, it's not the same. Ignore that one. Because you have a nice runaway here, right? You could be using this one if you have other information sources, which you will have in the professional section. One order in so far. Target is here. Let's see if it goes lower a bit, and then strike this one. But this is a market I wouldn't take. Even though I have the SSI data with me, which is the 4980, why should I sit and take trades with less probability when I know the rules, right? When I have so many other trades. I'm probably down for the week already. If you have a percentage goal each week and so on. And if you don't listen to that, you will learn from these that they are very commonly losers. I can show you this we saw Friday. Let's see, pound dollar. Here. See this one here. It goes down. Break this one, but didn't break the wick. It was a potential trade, but you're breaking several rules here because it couldn't take out these wicks. See that? Can't close above this consolidation here. And most likely this is going to just keep going down. If you stick to your rules, it will work, but much better. I don't say it will work every time, of course, but it will work much better. I think since that one had it, probably this one had it. Yeah, long wicks here, super dangerous. Here we have some sort of break of this one, but no, I ignore it. You had one better up here, right? Consolidation, head, volume strike below 50%. That trade would be much better, even though you would have exit here, right? Or that's up to you, of course, what you do with it. You can close half. If you use a one order, you can close 100% and so on. But you see, if you follow the rules as it should be, chances for you to strike to your last low or high is super high. Why not end with the party crusher? Because when you think you are unbeatable, you have a system that is working perfectly, all by a sudden you will be proven wrong, right? See here, consolidation, you have a clear, super nice 5-star volume coming down. You would take this one to this one. We do that. Like I said, sometimes market just loves to take out this high because they know people sit with tight stops here. We would too. We would have this one on the QB free method. You would be stopped out there on this one. But what normally happens after such situation, there come a new Quasi break, consolidation. In this case, we had only one super long candle, didn't take out all wicks, but chances are when you're in the market and this is the only trade you may see, you may still take it, right? So you say, okay, I'm going to risk this. I may take a lower risk, but I'm going to risk this one. And actually on this one, you were rewarded in the same candle. Most likely. I don't know if this one may be hitting first before it hit this one. But if it didn't, you will still be in the next few candles, right? You hit 50%, done, deal. And if this was not the winner down with this wick, this one would be. And again, if you take 90% of this one, it's just one order, leave 10% in, you take partial, you click on the order in MetaTrader, you set what volume you want to close. So you change the lot size, you close that, leave some small portion into it, because you never know, this one may be a super runner for 100, 500 pips more. We don't know, right? But that's up to you how do you set your risk management. That's something you must understand and learn yourself. And how much you want to stay in with the market. I want to show you this one because only showing perfect winning trades, where I started with pound yen, it was not perfect, of course. But I want to show you that this business design requires discipline, following the rules, because when you stop doing that, your chances of winning decrease. And still, when you're following the rules, like we did in this one, it can still take you out, right? If you use the exact 100 range up here. We be stopped out and then it was dropping. And that's a very normal, common thing that we see in the markets. But there are ways we can do this better, of course, which we will talk about in the professional section later. Or you can just, of course, use it as it is. Say, okay, I've done X amount of profits. I can afford a higher stop loss for this one if it goes really bad. And you stop maybe up here, and this is very common that it strikes the high before it drops, strike the low before it rises up. So this was a long video with many examples, but I wanted you to see this on a real chart, not just see this is how you should be doing it. Good luck, because that's not what we're here for. We're here to teach you, train you, make sure that you understand this, follow this, and get paid from trading. It's the best paying job out there. Unbeatable. The money market is the biggest salary you can have if you can managing a system with an edge, which we have here for you to use, train, and prosper with your fellow traders in our Discord. Thank you for being here. See you soon again.